Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Very good morning to you, Ankita.
Very good morning, Vinny.
And what's the handover actually coming in from the US markets finally after that holiday that they had?
Right, Vinny, I think the investors seem to be, not able to sustain the momentum that started at the start of the year. Now, Dow Jones was almost down 400 points yesterday, losing a fourth day of winning streak. There were a couple of corporate earnings that came out that really weighed down on the index. There was Goldman Sachs that was down almost 6.5% in trade, after it posted its worst earnings miss in a decade. That was really weighing down the index. The S&P 500 fell 0.2% in trade, while the Nasdaq Composite gained 0.1%, largely flat in trade. Now, the European markets were muted on Tuesday with concerns about global economy, high on the agenda at the Davos meet. That's the World Economic Forum in Davos that's going on right now, and that will be the key focus for the next 1 week for the European markets. The Pan-European Stock 600 climbed from earlier losses to close at 0.3% higher. It is the fifth straight session of gains for the index. Now, DAX was up 0.3%, CSE was up 0.4%. However, FTSE closed down 0.1%, was largely flat in trade. So these were the cues that were coming in yesterday. Winnie, what's crude looking like? Where the commodities at?
Actually, the crude prices, finally, let's say hello to the $86 per barrel mark for the Brent crude. And this is the first time we've seen the levels coming in since early December. Overnight, we saw crude oil prices actually close as high as 2% or more than, they rose more than 2%, the Brent crude futures, because, what we are seeing in terms of the global demand, China is opening up again, so demand will start increasing. So because of demand increasing, we're seeing an increase coming in the prices as well. And obviously, in its latest monthly report, the OPEC also sounded upbeat about regarding the outlook for 2023. So obviously, on the back of this, we've seen, whether Brent crude oil prices as well as WTI crude oil prices, both of them are up in trade even this morning. Brent crude oil is up almost 0.6% in trade, still continuing to trade above the $86 per barrel mark, while WTI crude oil is trading comfortably above the $80 per barrel mark as well. Higher hopes of demand coming in from China is surely a big factor coming into play. And let's not forget, gold too shining in trade. Yes, continues to see a bit of a gain coming in, muted gains this morning, but still trading about that $1,900 per ounce mark as well, Ankita.
All right, thank you for that handover, Vinny. Now, let's just quickly look at what are the events that you need to watch out for today. Now, we have Bank of Japan's outlook report and the rate decision, a very key important report that's coming out today. We also have Federal Reserve Beige Book. Now, remember, this book comes out 8 times a year. It gives a sense of where the economy is at. Now, we also have US retail sales and PPI data that's coming out, the US industrial production data also likely to come out today. We also have earnings coming out. I mean, we are in the thick of the earnings season, and we have IndusInd Bank, we have Persistent Systems, Reliance India, Majesco, CCL Products, Central Bank of India that will be coming out with their Q3 earnings. We also have today is the last day to buy HCL shares if you want to be eligible for the dividend. So it's the last day for that. And KDDL will be considering a buyback of shares as of today. So these are the events that you really need to keep an eye out on in today's trading session.
Okay, let's move on from events to what is actually happening on the dollar index. Now, the dollar index surged as much as 8% last year. But is it time for the world's most powerful currency to actually correct? Now, data shows that the US consumer price fell for the first time since December last year, and a first in more than 2 years that the Fed's aggressive rate hike actually stands also is under the scanner. And now Morgan Stanley has cut 2023 year-end forecast for dollar index to 98 now, much lower from the earlier projection and prediction of 104. Is the US dollar actually set to soften in 2023? Let's listen to some of the market experts that we spoke to as well. Let's go across and listen in.
I think there'll probably be one more spike upwards, and that's because of the fact that the Feds obviously will raise this month, most likely by 50 basis points, and then probably in the February-March meeting by another 25 basis points. So I think the dollar will likely spike up towards 2022 highs, and then a major reversal. And I base that on the spread differential of interest rates between the United States and the rest of the global economy.
Right, and moving on, the 6 largest banks in the US have until the end of July to show the impact that climate change could have on their operations. This is a part of a pilot program the Federal Reserve has unveiled. The climate scenario tests are considered separate from mandated bank stress tests for any economic crisis.
Okay, there is also only a 40% chance of a recession in 2023 compared with a market consensus of around 50 to 55%. Now, according to John Woods, the Chief Investment Officer for Asia Pacific at Credit Suisse, it's unlikely that the US will dip into a recession this year. The key factors underpinning Woods' view is low unemployment, a high household balance sheets, and low corporate leverages. Given it is hard to actually anticipate the recession developing in the first half of this year. They also believe that the inflation will stay elevated, and which is why the Fed isn't likely to pivot away from rate hikes until late 2023.
And United Airlines' fourth quarter profit and outlook for early 2023 topped Wall Street estimates. This was on the back of strong travel demand and high fares. Aircraft delivery delays and training backlogs have constrained airlines' growth, keeping fares high. This is another sign of a strong year-end for airlines despite severe winter storms during the popular holiday travel period.
Morgan Stanley reported the fourth quarter earnings that exceeded Wall Street expectations. The boost was on account of the bank's record wealth management revenue and growth at its trading business. Net income fell to $2.1 billion, but it still topped an analyst estimate. The company's wealth management business posted record net revenues of around $6.63 billion in the latest quarter.
And some more was coming in for the FTX. Bankrupt crypto firm FTX said that $415 million worth of crypto was hacked from the exchange's accounts. This represents a sizable portion of the identified assets the company is trying to recover. FTX filed for bankruptcy after a wave of withdrawals crippled the exchange and sister hedge fund Alameda. FTX's advisors are also reviewing a $2.1 billion share repurchase payment from FTX to crypto exchange Binance.
Okay, now some update coming in from China. China's Vice Premier Liu He said that the world needs to abandon Cold War mentality and seek to strengthen the international cooperation. In a special address at the World Economic Forum in Davos, he also called on countries to improve diplomatic ties to firmly safeguard world peace. He separately described China's COVID situation as steady. Listening to what he had to say and what more he had to say about the Cold War mentality as well.
We have to abandon the Cold War mentality, try to understand the essence of things from the perspective of material duality, endeavor to build a community with a shared future for mankind, and join hands to respond to global challenges. We believe that an equitable international economic order must be preserved by all of us.
Well, sharing the views was former US Secretary of State Henry Kissinger, who said that Russia must be given the opportunity to one day rejoin the international system. However, he said it was important to avoid an escalation of conflict between Russia and the West as a result of it feeling the war had become against Russia itself.
And the world has never seen an energy crisis of this depth and complexity, according to Fatih Birol, the ED at International Energy Agencies. Listening to his speech at the World Economic Forum Summit in Davos.
we are entering the first global energy crisis. Our world has never ever seen an energy crisis of this depth and of this complexity. Why? This is very simple, the reason. Because Russia, as of 24th of February, was the #1 energy exporter of the world. We aren't talking about any country, top energy exporter. #1 oil exporter of the world, #1 gas exporter of the world, major player in the coal markets. And the Russia's actions and the measures that the countries took against Russia meant we are in the middle of the first global energy crisis with huge implications on oil and gas markets. Biggest driver of renewable energy growth today is energy security. Renewables are pushed very strongly because mainly for energy security reasons, because it's homegrown. Renewables are the energy of peace. So therefore, the long-lasting solutions to our energy security problems go through clean energy.
Well, with that, it's time for us to slip into a short break. You don't go anywhere. There's lots more action coming up on the domestic front on the other side of this break.
Welcome back, and you're watching Market Cafe on ET. Now, let's keep it rolling then. And we have the Finance Ministry that will be holding a review meet with the PSU banks. Now, what sources are telling your channel that the meet is likely to be chaired by the Finance Service Secretary and will also be attended by officials from the Ministry of the Corporate Affairs as well as Agriculture Secretary as well. Now, what else is actually going to be on this agenda of this review meet? Let's go across to my colleague Meghna Mittal, who's here with more details. Meghna?
Right, Finance Ministry has called for a review meeting with all the public sector banks on January 19th. That is what the sources are confirming to us. Now, in this meeting first of all will be chaired by Financial Services Secretary Vivek Joshi, and all the SBI chairmen and all the CEOs and MDs of public sector banks are likely to attend this meeting. Now, the basic focus of review in this meeting is the financial inclusion. Now, all the banks, it will be reviewed that what has been the progress as far as these public sector banks are concerned for coverage of unbanked villages with banking outlets, which has the 5-kilometer criteria. Apart from that, also it will be assessed that what has been the progress in opening the brick and mortar branches in 3,000 plus population villages. That is what the sources are confirming to us. Apart from that, the inoperative Pradhan Mantri Jan Dhan Yojana accounts will also be assessed and taken a detailed review of. Apart from that, what the sources are confirming that banks are also like to be given targets under the various inclusion schemes that are there, like Mudra scheme and the Stand Up India scheme. So their progress so far, plus they may also be given further targets to achieve under these schemes. Apart from that, the Corporate Affairs Ministry will also be giving a presentation on the proposed amendments under the Insolvency and Bankruptcy Code. Apart from that, the Agriculture Secretary is also likely to attend this meeting because there is also likely to be discussion on the KCC, the Kisan credit cards, and also the saturation for PM Kisan beneficiaries. So detailed review agenda is definitely there, that it will be held on January 19th.
Right, and well, at the sidelines of the Davos summit, my colleague Navika Kumar spoke to Smriti Irani, the Union Minister of Women and Child Development and Minority Affairs. Listen in as she gives a lowdown of India's skilled workforce and more.
We have prioritized India's needs, and we have done so abashedly. We haven't done it meekly. There have been many who have tried to push us against the wall so that we are apologetic in our position with regards to this particular issue. The Prime Minister has said that this is not an era for war. But I think that the External Affairs Minister has very succinctly put India's position on the world stage. Yes, it brings about disruptions. Normally such kind of conflicts do have a disruptive impact over a long period of time. But what is it that you're assured of? You're assured that India will be a part of the solution. you're assured that India will be a part of humanitarian build-up back of processes which help all nations at large.
But one of your senior ministers has made a statement: by June we may be in the throes of recession. Is
that the finance minister?
Is there a sense that you get from the talks that are happening at the World Economic Forum that that's a reality we are grappling with?
There is a takeaway that I individually have, and obviously you at times now recognize I'm not the finance minister or the commerce minister. There is a sense that I go back that one of the most trying economic times were when we were hit by the pandemic. Given the large populace that we have, we were not expected to be a deliverer not only of solutions domestically, but also become a kind of a bridge for delivery of pharmacological services. Davos it is the India story. Yes, there are many states that are trying to push a state-specific agenda. It is welcomed by everybody, but ultimately the message here is India is open for business. And the message here is that India's growth story, and at the altar of reform, India never sacrificed the interest of inclusive growth.
And meanwhile, Bharti Airtel Sunil Mittal shed some light on how 5G adoption will benefit many in the industry, and adds that once people get used to the 5G, they will not want to go back to 4G. Let's go across and listen in.
The most benefit will come out of 5G is the industrial application. And that is where we are most excited about. We have started to work with Bosch, we are working with Mahindra Auto to ensure that we can make their life better, more efficient, more cost effective. And I think that's where the excitement will be. And that's where people like us and Accenture or IBM go to market jointly, create solutions for all these companies and do what's required. In the meanwhile, people will get used to better speeds, high speeds, low latency for the regular devices as well. I mean, you can go back and live your moment of dial-up days, and you can never go back there. So similarly, when you get to 5G, it's very hard for you to go and work your normal routine affairs also on 4G. It's going to cost a lot of money to the entire telecom industry. Many players are here, costs you a ton of money on spectrum. So we are looking at about $400-500 billion worth of spends by the industry in the coming few years to convert the world into a 5G space.
Well, that was Sunil Mittal for you on 5G. And Vijay Kumar of HCL shares how the tech sector and the rise of AI will impact other industries. He also emphasizes on the need to upskill in current times. Let's take a look.
If you take a slightly bigger picture, right, of the 8 billion people in the world, 3.2 billion are really are working. They're in the labor pool. Of the 3.2, 1.6 billion people are employed in agriculture and industries, and 1.6 is employed in services. Of the 1.6, about 20% are employed in the tech services. Now, tech services, while it has a big influence on what technologies are getting created, what automation is coming, but it has a bigger impact on the rest of the services, which is 80% of the services. So I think ChatGPT and generative AI, I think it's going to create an ecosystem around itself, because ChatGPT is generative AI technology, but there needs to be a lot of ecosystem that needs to be created around it, which will drive a new level of innovation. It's not that 1 billion jobs are eliminated. I think it's 1 billion roles will need reskilling. Right?
But is that a bigger number now that we have generative AI?
I think it's going to be different for different industries. If you see technology industry, 1 billion is about a third of the workforce, right? But in the technology industry, it could be a little higher, maybe more than half of the workforce needed to get reskilled. One advantage that the tech industry has is it has a huge influx of young talent. So when they come in, they get trained on new technologies.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stock-specific news after this break. Welcome back, and you're watching Market Cafe on ET. Now, let's look at what the Asian markets are doing and how they've opened up. Given, that how actually the US markets have closed a bit mixed, Asian markets too are seeing a bit of a struggle coming in to pick up direction. Like, look at Nikkei. It's up almost 0.6% in trade as of now. But on the other hand, Shanghai too, mild gains of almost 0.3%, but Kospi, that is the one actually trading in red as well, not picking up any direction in terms of them, down 0.7% in trade. Also, we have Shanghai too not seeing any much of a gain there, while Hang Seng too holding on to slight bit of a gains over there, 0.4%. ASX 200, which is the Australian index, also is seeing mild gains. So, we're not seeing much of a direction there, not much of a positive move coming in there. SGX Nifty also is indicating a muted start coming in for the Indian markets. As of now, SGX Nifty is only up 32 points in trade. That is almost 0.2%. So, keep an eye out, because mixed opening or a muted opening is what you could be expecting coming in for the Indian markets, Ankita.
All right, so muted start for the Indian markets is the word coming in. Let's quickly look at what we have lined up for you on the market. We have Atul Suri of Marathon Trends at 9:20 for you on the current market trends. And we have Shanay Shah, President Shelby Limited, on earnings with ET Now.
Okay, and let's move on. It's that time on the show where we bring you all the stocks to watch out for in trade. What's going to be buzzing? What's going to be falling in trade? Let's go across to Lisa, who's here with us in the studio. Good morning, Lisa. And what is the list of stocks that you have on your radar today?
Well, good morning to all. Firstly, ITC will be in focus, as it will be acquiring around 47.5% stake in Yoga Bar at 255 crore, and it intends to acquire the balance stake over the next 3-4 years. Deal has been done at 4 times price to sales ratio. And moving on to Adani, they have updated on their Q3 update. So they say that the transmission lines they have operated at upwards of 99.75%. Distribution business also saw 4% year-on-year growth at units sold at 216 crore units, and the distribution loss also has improved at 5.34% versus 6.53% year-on-year. Moving on to Landmark Car, the vehicle sales saw a growth of 44% year-on-year, and the after-sales services also saw growth of 30% year-on-year. On Polyplex, Indorama has planned to buy around 51% stake in Polyplex Thailand unit, and the market value of this unit stands at around 5,610 crore. Eris Life Science has acquired part of the dermatology portfolio of Glenmark Pharma by way of acquisition of 9 trademarks, and the consideration is an all-cash deal of rupees 340 crore. RVNL has emerged as the L1 bidder for rail and metro projects worth rupees 1,058 crore. Moving on to PTC India, JSW Energy, Tata Power and Adani Group are in fray for acquiring the stake, and the floor price for the same may be finalized in 4 to 6 weeks. And lastly, on ITBI, the Dutch bank ING is evaluating to buy controlling stake in ITBI. So these are the stocks that the investors will keep in their radar for today.
Right, thank you for that, Lisa. We will surely keep all the stocks on our radar, but you also have the brokerages, so we're not letting you go anytime soon. Give us what the brokerage notes are saying. Tell our audience about the brokerage notes that came in this morning.
Yes, absolutely. Firstly, on ICICI Lombard, Phillip Capital has maintained a buy at a target price of 1,550 per share. So that entails an upside of around 23%. They say that the combined ratio, though it remains elevated on higher OPEX, the PAT growth was modest, and they expect the operating performance to improve going forward from here, as they remain positive on the long-term growth opportunities in the non-life space. Another buy coming in from Jefferies. They have maintained a buy with a target price of 1,620 per share. So that entails an upside of around 30%. They say that the lower underwriting profits and investment income that has hurt the profitability. However, more spending towards marketing and sales, that is expected to ramp up the agency and health insurance. Moving on to Macquarie, on ICICI Lombard, they have maintained an underperform on the stock at a target price of 995 per share. They say that though the growth was driven by the health segment, however, the motor segment, that remains a pain point for the company, and the valuations are still expensive as the technical overhang persists. Moving on to Bank of India, Credit Suisse has maintained not only an outperform rating on the stock, but it has also hiked the target price to 110 from 105 earlier. They say that the core profitability has improved, provisioning though remains at an elevated level. Asset quality remains strong with slippages at around 1%, and despite comfortable CET ratio, management has planned to raise 1,500 crore via the QIP. So that's all on the brokerage radar for today.
Okay, Lisa, thank you so much for that, both the stocks and news as well as the brokerage radar. But let's move on, and budget is just around the corner, and now we had Sridhar Shivaram, investment director at Enam Holdings, share his expectations for the union budget. Let's go cross and listen in.
If I connect the dots and listening to what Mr. Bajaj had to say, and some of the other comments that we have seen, this is what I think may happen, that is basically talking of rationalizing the tenure for long term. So today, if you see, the long term capital gains for equity is 1 year, for real estate and REITs is 2 years, and for debt is 3 years. So you're really talking of rationalizing this. It's highly possible that everything moves to 3 years. Okay, so that's number one. The second is that the difference between a long term and short term is only 5%. So you're talking of 10% for long term and 15% for short term. That seems too less. It's highly possible that 15 goes up, maybe to 20, worst case to marginal tax, but we'll know in the budget. The other thing is that the government is looking at rationalizing all savings products which are tax-free today. So they've already, sort of plugged the loophole with capital gains, with say insurance in Europe. There are other insurance products which are tax-free. So what we hear is that is the other possible tinkering around which the government could do. We don't know how this plays out and what all come. If the worst case comes in everything, then that's bad. Which is why I said that some bit is already priced in, and some bit is not. So we will get to know more on the budget day as.
Well, moving on to an ET Now report, Greenco, Tata Power, JSW Energy and the Adani Group have been approached to assess their interest in acquiring a strategic stake in the PTC India. Now, 5 public sector undertakings, including 4 promoter firms of PTC India, are planning to sell their stake in the power trading company that is hit by a controversy over governance issues at its financial services subsidiary.
Okay, let's move on. In less than a year, you will be able to go from South Bombay to Navi Mumbai in 20 minutes from the current 1 hour. Thanks to the Mumbai Trans Harbour Link, which is scheduled to open for traffic in November this year. How will this project actually change the face of the maximum city? Mansi Dave is here with more details of that.
India's longest sea bridge, Mumbai Trans Harbour Link, is all set to see the light of the day, and this bridge is going to change the entire scenario of Navi Mumbai real estate. The work on the massive project is on track and it will open for traffic in November 2023. And the biggest attraction here is it will connect South Mumbai to Navi Mumbai, and the traffic barriers will be solved in just one go. 90% of the civil work is completed, and let's now take a look at how will it change your commute pattern. In today's scenario, when you travel from Sivri to Navi Mumbai, it takes around 2 hours of travel time to cut 27 kilometers or even more depending on the traffic scenes. But once the Trans Harbour Link becomes a reality, the travel time will be reduced to just 20 minutes. Yes, just 20 minutes over here. Again, from South Mumbai to Navi Mumbai, when you travel, it takes around a travel time of around 1 hour or even more basis on the traffic scenes during that time. But once the Mumbai Trans Harbour Link becomes a reality, the travel time again will reduce to 20 minutes. So the travel time from 2 hours will see a reduction of around 20 minutes. Is a big positive and a big attraction which will be seen in future. At the same time, not only this, the Mumbai Trans Harbour Link gives direct access to Nhava Sheva Port, Mumbai-Pune Expressway, Mumbai-Goa Expressway Highway and new international airport. So clearly Navi Mumbai and South Bombay barriers will be solved in one go once this sea bridge becomes a reality. At the same time, if we have a look look at what happens to the real estate prices, a bigger positive or a bigger attraction is that the connected places will see a price indication, price appreciation. There are clear-cut indications that there will be price appreciation seen in South Bombay, and at the same time, South Bombay has seen little price appreciation during last 10 years, but a big price appreciation will be seen in Navi Mumbai market and also Sivri and Parel real estate market. So clearly after this development, Navi Mumbai will be an attractive bet for home buyers. At the same time, land development will also be possible in Navi Mumbai, Sivri and Parel.
Well, finally, Winnie, we'll be going to Navi Mumbai more often, I guess, now. Right. Moving on, it's time for news Fatafat. So quickly, Swedish climate activist Greta Thunberg was hauled away and detained while protesting at the open-cast coal mine after police warned that the group would be removed by force if they did not move away from the edge of the mine. She was later released following an identity check. And Bharat Pay's co-founder Bhavik Koladia has sued his former partner Ashneer Grover and the fintech unicorn to court to reclaim his shares in the company. As per reports, Koladia restrained from commenting anything about it.
And BJP chief JP Nadda is to actually continue to head the party till June next 2024. Amit Shah, BJP senior strategist, announced this on the second day of the National Executive Meet. Remember, there was expectation that JP Nadda's term will be extended with the 9th state election lined up this year and general elections in 2024. And update coming in on the First Health Working Group meeting under India's G20 presidency will be held in Thiruvananthapuram from today, tracking the health emergencies, preparedness and response, strengthening the cooperation in the pharmaceutical sector and the digital health innovation and solutions are the three priorities under the health for India in G20 presidency. And Olympics medalist PV Sindhu made a shocking first round exit from the ongoing India Open 2023, losing to Thailand in Delhi. Now, in the first game, Sindhu tried to put a fight but fell away short.
Well, with that, we're completely out of time on this show. You don't go anywhere. There's lots more action lined up for you on the market on the other side. Thank you so much for tuning in.